The Trader's Edge: How to Think, Trade, and Win in Any Market by Money Masters X. Introduction. Welcome to the game. Trading. Just the word feels exciting. Fast charts, quick profits, and those stories of people turning a few $100s into a fortune. But for every success story, there are countless beginners who lose everything. This audiobook is about cutting through the noise. Trading isn't magic, and it's not gambling when done right. It's a skill built on discipline and probability. Imagine this. Two people placed the same trade. One wins, one loses. Was it luck? Not if one of them had a plan and the other didn't. By the end of this book, you'll understand how to think like the first trader. Chapter 1. What trading really is. Trading isn't about being right all the time. It's about making smart decisions repeatedly. There's a big difference between investing and trading. Investing is holding for years and riding out ups and downs. Trading is taking shorter-term opportunities, days, weeks, or even minutes. Think of it like this. Investing is planting a tree and waiting for it to grow. Trading is gardening every day, trimming, adjusting, and sometimes pulling weeds. The market doesn't care about your feelings. Price moves because buyers and sellers agree on a level, and then that level changes. If you can see that movement without emotion, you've already separated yourself from most beginners. Chapter 2. Building the Right Mindset. Fear and greed are your real enemies. Fear makes you sell too soon. Greed makes you hold too long. Take an example. Imagine you buy a stock at $50, planning to sell at $55. The price jumps to $53 and your heart races. You sell to lock in gains. But later that day, it hits $55 like you expected. That's fear controlling your decision. Or maybe it goes to $55 and you decide to hold for $60, then $65, and suddenly it's back to $50. That's greed. Professional traders know losses are part of the game. They focus on following their plan, not chasing perfection. Before every trade, ask, if I lose here, will I still feel calm? If not, you're risking too much. Chapter 3. Controlling Risk. Protect your money first. Grow it second. Never risk more than a small slice of your account on a single trade. Professionals often risk around 1%. Let's say you have a $5,000 account. Risking 1% means only $50 per trade. That might sound small, but it keeps you in the game. 10 losing trades in a row won't wipe you out. Also, think in terms of reward to risk. If you risk $50, look to make at least $100. This way, even if you win only half your trades, you'll still grow your account. Chapter 4. Reading Charts Simply. Charts don't predict the future. They show where buyers and sellers have been active. Say a stock keeps dropping to $100 and bouncing higher. That's support. Buyers are stepping in. If it keeps hitting $110 and falling, that's resistance. Sellers are taking profits. Imagine price finally breaks above $110 with strong volume. That's often a sign more buyers are coming in, a breakout. But if it jumps above $110 briefly and falls right back, that's a false breakout. Keep your charts clean. You don't need 10 indicators. Focus on price first. It tells you who's in control. Chapter 5. Finding your trading style. Choose a style that fits your life. If you can't watch markets all day, avoid day trading. Swing trading, holding for several days, may be better. For example, if you notice a stock climbing steadily over weeks, you could buy and hold it for a few days, selling when momentum slows. That's swing trading. Whatever style you choose, test it first. Go back and see how your method would have worked over the past 50 trades before risking real money. If it wouldn't have worked then, it probably won't now. Chapter 6. Executing with Discipline. Getting into trades is easy. Getting out is where most people fail. Suppose you plan to buy at $100 and sell at $105 with a stop at $98. Stick to it. If price hits $105, take your profit. If it hits $98, take your loss. Don't hope it comes back. Keep a journal. Write what you did and why. Later, you might notice you always lose when you trade right before major news, or that you win more when you wait for confirmation. That knowledge is gold. Chapter 7. Tools and Next Steps. As you grow, you'll hear about options, futures, and leverage. These tools let you control more money than you put in, but they can wipe you out just as fast. If you try them, start small. For example, instead of betting on a stock moving up with unlimited risk, you could sell a credit spread on an index like SPX, where your maximum loss is capped. This is how many professionals limit risk while trading options. Remember, your goal isn't excitement, it's survival and consistency. Conclusion. Your edge is you. There's no secret formula or magic indicator. Your edge is your ability to stay disciplined while everyone else panics. Losses are part of trading. The difference between amateurs and pros is that pros manage their losses and keep moving forward. Trading rewards preparation, not desperation. Protect your capital, stick to your process, and let the profits take care of themselves.